I've started to look at electric cars. It wasn't something that I originally thought I'd be interested in. I'm definitely more of a late stage adopter when it comes to technology. But because there are a number of tax credits out there for these cars, I wanted to investigate them as well as the other potential savings that could come along with them.
Are you ready for a successful retirement? We're addressing the topics facing today's retirees. Welcome to Retire with Ryan. Now here's your host, Ryan Morrissey.
Welcome back. This week, I'd like to talk about electric car tax credits and are they worth it? We're going to talk about how tax credits work, how these tax credits work if you buy an electric car, how this could help you, and additional ways that this electric car could also save you money. And I have to say that the impetus for this week's podcast is definitely a little self-serving. I'm potentially in the market for a new car. I would say I've been pretty thrifty over the years with the cars that I've owned. Someone told me a long time ago about how car prices work and how within the first 3 years, cars have a significant depreciation, meaning the cost of the cars go down significantly. So I've always purchased cars that were at least 2 or 3 years old, and this allowed me to pay less for the cars than I would if I bought them new. And I've also kept cars for a long time. Most of my cars I've kept to have over 100,000 miles. So I've had a number of years where I didn't have a car payment. My current car that I have is an Infiniti that I've had for 8 years. It's been paid off for 3 years. So I've really enjoyed not having 3 years of car payments. But what seems to happen with every car, my car has about 130,000 miles on it. Some things are starting to break down. And with my last car, I think I kept it a little longer than I should have. And I added up, before I knew it, I had spent over $6,000 in like the last 12 months fixing up the car, which is pretty close to the cost of a new car payment, even for a used car payment. So I'm trying to avoid that happening again. And so what I've started to look at is I've started to look at electric cars. It wasn't something that I originally thought I'd be interested in. I'm definitely more of a late stage adopter when it comes to technology. But because there are a number of tax credits out there for these cars, I wanted to investigate them as well as the other potential savings that could come along with them. So first of all, what is a tax credit? Well, a tax credit is a credit that you are eligible for buying certain goods. It could even be for having children, right? And it allows you to offset dollar for dollar federal income tax that you owe. So let's just say that you owe $5,000 to the IRS after you calculate your taxes. If you had the ability to have a $5,000 tax credit, then that would totally wipe out what you owe to the IRS for that tax year. This is in contrast to a tax deduction. So a tax deduction reduces your taxable income before you calculate the tax. So let's just say in that same example, you had that same $5,000 available to you, but it was a tax deduction. Then if your income originally was, let's say, $30,000, you would then reduce it to $25,000 to then calculate the tax that you owe. So a tax credit for that reason is a lot more powerful. So currently, there are tax credits available to you if you purchase certain electric vehicles. And these tax credits are up to a maximum of $7,500. And I'll put a link in the show notes to an article that I found while researching this from Edmunds that lists out all of the vehicles that you can buy that offer this tax credit. So this is for fully electric vehicles. So if you were going to buy one of these vehicles, you'd want to do it in a year where you had taxable income so that you could fully take advantage of this credit. So you'd want to have, you owe at least $7,500 to the IRS in that tax year to fully take advantage of this. Now, if you have low income or maybe you're unemployed when you're going through this or early in retirement, well, what could you do to help create income? Well, you could take some money out of your retirement accounts, and this would be a great way to take some money out and then have the tax paid by purchasing an electric vehicle, because $7,500 tax credit will go a long way to covering a lot of an IRA distribution. And you'd want to make sure if you're doing this after you're 59 and a half, because you don't want to pay the 10% penalty, which would apply if you took a distribution before 59 and a half. But if you just do the math, if you assume your tax rate is 12%, which is the second tax bracket that we currently have, now I know these are possibly changing in the future, but that's about $62,000 that you could take out to generate that $7,500 IRS tax bill. So that would be a large amount that you could take out of your IRA, not pay any federal tax. You might still pay state tax, but there's a significant benefit to that. Unfortunately, if you didn't owe $7,500 of taxes to the IRS, let's say you only owed $5,000, then you would only be able to use $5,000 of that tax credit. There is no refund that the IRS will give to you if you don't use up the full tax credit, unfortunately. So it's really important to make sure if you're trying to do this that you use up that full tax credit and not let it go to waste. Now, every tax credit obviously needs to be offset against how much it costs you to get that tax credit. This tax credit doesn't come for free. You have to buy something. And in this case, you have to buy a new car. And I mentioned earlier the list that Edmunds has of the electric vehicles that offer tax credits. And to get the full $7,500 tax credit, this needs to be a fully electric vehicle. And there's a little over 10 cars on this list. Some are as low in price as $26,000, and some are as high in price of $80,000. So if you're buying a new car and you can find a car on this list that works for you and it's similar price point to what you normally would buy, then I would say this could definitely be a big win for you because you're getting this full tax credit as well as some other potential savings that we'll talk about in a little bit. And then there are other cars that are considered hybrids that are not fully electric, and those also qualify for a tax credit, though it's usually not the full $7,500 tax credit, because to qualify for the full $7,500 tax credit, the car has to have a certain size battery, and usually that's only electric vehicles. But there still could be, looking at this list, $5,000, $4,000, $6,000 tax credit available to you. Unfortunately, what really brought me down this road was thinking about buying a Tesla car. And unfortunately, Teslas do not qualify for a tax credit. The way when these tax credits were set up is that they were only available until the car manufacturer sold 200,000 electric cars. In Tesla's case, they reached that number in 2018. And it's possible that some of these other manufacturers will also reach that point, though from reading a little bit, it doesn't seem like any of them will reach that point this year. So you can't, unfortunately, get that tax credit by buying Tesla, but a number of other manufacturers you can. But there is legislation out there that might change that. And this is actually part of the $3.5 trillion infrastructure package that is in Congress right now. Part of the, bills that are inside of that will actually reinstate the tax credit for Tesla, as well as add an additional tax credit if that vehicle is manufactured inside the US and also manufactured with union labor, though this wouldn't apply to Tesla, and I don't think this would apply to Toyota either because they don't use union labor. So we'll have to wait and see what happens with that. Now, what about if you lease the car? If you're not familiar with leasing, I'm looking to talk about that in a future episode, but very briefly, you can usually get a lower monthly payment on a lease than you can by buying a car outright or borrowing the money to buy the car because you don't own the car. With all leases, they have a limited amount of miles that you can drive per year on that car, and you determine that when you set up the lease, anywhere from 10,000 miles per year to 15,000 miles per year. And then if you go over that annual allowance when you turn your car in at the end of the lease, then you have to pay a mileage penalty, usually of around 20 or 25 cents a mile. But if that still works for you, then a lease could be a nice way to have a lower car payment than you would by buying the car, and also not have to worry about paying for any of the maintenance on the car because usually all that's covered. But unfortunately, if you lease one of these cars, electric cars, or even a hybrid, that tax credit does not go to you. That goes to the manufacturer. So that is definitely a drawback of leasing. But if you are buying, you don't have to pay cash for the car. You can borrow money to buy a car, and it's a great time to be borrowing because interest rates are really low. You can probably find a car loan at rates of 3%, if not lower. So that's a very good interest rate to be borrowing on a car loan. So what are some additional ways that this car could help save you money? And when I was looking at this, I was really looking at it from finding a car with a reasonable car payment that also has availability, because currently it's not a really great time to buy a used car because of the global pandemic, COVID-19. There's a tremendous shortage with new cars being manufactured. So that's created a shortage in used cars. It's also created a significant increase in the cost that you're paying for a used car. It's great if you're selling a used car. I know that if I were to sell my used car right now, I can get a lot more for it, almost double, versus what I could have gotten for it a few years ago. But if I were to buy another used car, I'm going to be paying more for that. So that's why I was thinking of buying a new car. So getting back to looking at an electric car, how it can help you, well, the savings really is in the fact that you're paying to charge your car and you're not paying for gas. So how do you know if that's going to be cheaper for you than buying gas? Well, there's a couple ways you can do it. And one way is to figure out how much electricity it would take to charge your new electric car. So one of the cars I was looking at has a battery that's rated as 75 kilowatts per hour battery. What that means is that that's how many kilowatt hours it will take to charge the battery. And this car has an average battery range of around 300 miles. So if you take that 75 kilowatt hours and you divide that by the cost of a kilowatt hour for you, you can then calculate how much it will cost you to charge your car. So pulling out my recent electric bill, I have United Illuminating and I'm in Connecticut, so usually you pay a lot more for electricity. Last month, I used 1,514 kilowatt hours and my bill was $332. And so you divide the 332 by the 1,514, and that gives me 22 cents per kilowatt hour. So that's how much I'm paying for electricity. If I then divide the amount of kilowatt hours it takes to charge my battery, which in this case is 75, by the cost per kilowatt hour, which we calculated at 22 cents per kilowatt hour, that gives me $16.50. So that's how much it would cost me to fill up my electric gas tank, so to speak, for a 300-mile range on an electric car. If I then equated that to how much it would cost me to fill up my current combustion gas car, I'm paying $3 a gallon right now, and that's a pretty low rate. In some areas in Connecticut, it's higher. And so it would cost me more to fill up. I have a 20-gallon tank, so it costs me about $60 to fuel up. And additionally, you can then figure out how much per mile your car is actually costing you. And if my car is averaging about 20 miles a gallon, $3 divided by 20 gives me 15 cents per mile. That's how much each mile is costing me in my car. When you compare that to the average range of the electric car, I'm paying about 5.5 cents per mile. So this is where the additional savings could come in. And it's estimated that you'll pay about half as much to charge your electric car as you would by paying for a gas car. There's also other savings in there too. Apparently, you don't use your brakes as much with a lot of electric cars, so there might be some savings on brake pads. Your tires do last about the same, but you also don't have oil changes. And most electric cars actually have less working parts than a typical combustion automobile, so you most likely have less maintenance on the car. So these are all things to kind of factor in. And when you're looking at your retirement, obviously you're looking at ways to cut costs. And this could be a way to cut costs, maybe by switching over to an electric vehicle, getting the tax credit if you're in need of a car, and maybe you're able to hold on to one of these electric cars for a long time. And it's estimated that they will last about 300,000 miles. So that's a pretty long time that you could have one of these cars. I should note too that I know with a Tesla car, if you were to charge this car at home, you would need to buy a charging kit, which I think is around $500, and then have an electrician install it for you, which I'm not sure of that cost, but that would be an additional cost. You also can plug in your car just to a regular outlet, though that will take significantly more time. So you'd have to weigh that out. And then there's also what they have, these supercharging stations you may have seen. And with those, you usually will pay more per kilowatt hour than charging at home, but they do charge faster, and you wouldn't have the cost of paying for this charging station at your house. Though from the articles that I've read, it does seem that a lot of the savings that you can benefit from by owning one of these cars will come through charging it as home, because you're usually paying less per kilowatt hour than you would if you were charging it at one of the supercharging stations. So I hope this episode helps give you some more information on how electric vehicle tax credits work, as well as hybrid vehicle tax credits work. Definitely check out that article that I have a link to the show notes in. And if you're interested in one of these cars, there's probably more research you'll need to do and do some test driving. As a reminder, if you don't have a plan for retirement or your plan is in need of an updating, think about attending one of my retirement readiness workshops. They're starting the end of September and continue into October. You can either attend them in person or online. They're a 2-night class, about 3 hours each night, where we cover the gamut of issues to be thinking about when planning for retirement and developing your retirement plan. To learn more about that, go to retirewithryan.com and click on workshops. Hope that you have a great week, and I look forward to talking to you next Wednesday. Take care.
You should consult a financial advisor familiar with your specific circumstances before you make any financial decisions. Nothing in this broadcast constitutes a solicitation for the sale or purchase of any securities. Any mention of rates of return are historical or hypothetical in nature and are not a guarantee of future returns. Ryan Morrissey, CFP, is an investment advisor representative of Morrissey Wealth Management, LLC, a registered investment advisor.